are literally shaping the planet.
Purpose is the only pathway to a regenerative future.
We have a choice to stay with the status quo or to change.
What is the point of trying to be just resilient when we can actually innovate?
To kind of kick things off, I think it would be best if you guys just want to go ahead and introduce yourselves. Go ahead and give us an overview of who you are, what your background is, and what your respective companies are working on, and kind of how you guys are approaching corporate venturing. I know I had a few setup questions that I sent you all earlier, but I kind of want to jump straight into the meat of this, and let's start talking about what sort of cool technologies you guys are seeing, what sort of startups have you most excited. So after you make your introductions, we'll jump into all of that stuff. And just kind of looking at the floating heads on the screen. Mateo, you're the first one I'm looking at, so if you want to kick us off, go for it.
Great, yeah, thanks Brian, and thank you very much for having me, and it's a pleasure to be with Raja and Ben, kind of very known faces to us, working very closely with them, so great to have them. Yeah, so I'm Mateo Zimmerman. I'm investment manager at CEMEX Ventures. CEMEX Ventures is the open innovation arm of CEMEX. I will speak about a little bit of detail, so a little bit of background on me. I'm an industrial engineer. Actually, don't come from construction, but my life has taken me to construction. So I started working as an industrial engineer, actually nothing related to industry, but worked on private equity. Then very quickly kind of working with startups as an advisor. Then worked 5 years at Boston Consulting Group, very focused on the industry practice area. Worked at also a little bit with energy, but then started focusing on construction. And actually, the last projects I did were related to the problems in construction around digitization, kind of the adoption of BIM, how BIM would be kind of a very, very helpful tool for the industry. And that's how I got excited about construction, about the opportunity that there is there to fill the gap in the very known productivity gap that we have, right? And that's when I joined CEMEX Ventures.
Awesome. All right, Ben, you're next on my screen.
Great. Thanks a lot, Brian, and great to connect Raja and Mateo. So I guess I'll give the personal introduction. I'm on the NOVA External Ventures team for Saint-Gobain. Prior to this, my background was in strategy consulting, and I ran what I called a micro fund, kind of on the side, where I would invest in very early stage, kind of small level venture investments. And so the combination of those backgrounds really lended itself to corporate venture capital. And this was kind of the perfect space for me, and aligned with all of my interests in the built environment. And so I'm with the NOVA External Ventures team. It's a global team where we have a presence in the US, in France, and in China. And we invest on behalf of all of the family of Saint-Gobain companies. And so a wide range of industries, really wide range of stages, and focus areas. But my focus is all things building materials and construction processes.
Perfect. And last but certainly not least, Raja.
Thanks, Brian. Thanks for hosting, and good to see you, Ben and Mateo. There's a bit of a running theme here. So I joined Suffolk 2.5 years ago after 3 years in consulting with McKinsey. During then, I spent a lot of time as a generalist with a bit of focus on private equity diligences and M&A for big corporates. My last 6 months at McKinsey, I spent my time working with Quantum Black, which is their AI and ML arm. So working with data scientists and data engineers on big analytical problems. And that's what opened my eyes to the opportunity in construction. My clients at Quantum Black were a mining company and a sports team, not sort of entities that you think of as super data forward or places where you can apply sophisticated data science models. So when the opportunity to join Suffolk on the data side at first came up, I was very excited. Both my parents are architects. My grandfather used to own a GC in the Middle East back in the day. So I grew up with just sort of design schematics all over the house, something that's been close to my heart. Prior to that, I was a bioengineer by training. So from engineering to consulting to construction, it's been a great journey so far. At Suffolk, we're a corporate venture capital. We invested balance sheet capital into anything and everything that drives capital efficiency in the built environment. Suffolk is a general contractor at heart, but we have a real estate investment arm. We're setting up a design business unit. We're setting up a facility management business unit. And the thought behind the fund is there's a lot of innovation happening up and down the built environment. So let's make sure that we're able to add value there within our core competency as a general contractor. So use cases touching the construction phase, but before and after that as well.
That's great. And you started to touch on it there. And I want to kind of continue this just a little bit for the entrepreneurs and the startups that might be listening in right now. I come from a background of corporate venture and consulting. I understand that your organizations aren't always the easiest to navigate. It's not a traditional venture capital process that they're going to go through. But there's also a lot of value that each of you can create respectively beyond just writing a check. So I'm wondering if you could each kind of touch just quickly on, beyond the stages in the company you look at, but how do you provide value to the startups that you guys invest in beyond that financial piece? And Raja, you can kind of go ahead and continue there. We'll just go in reverse order from the last round of questions.
Yeah, happy to. So for every investment that we make, we have a sort of a financial lens, which is very similar to institutional venture, and a strategic lens. On the strategic front, we take it on a case-by-case basis. In an ideal scenario, Suffolk could be a customer of that startup. Our teams would work very closely with the company, give them product feedback, and help them scale. On another end, where a company is, say, outside of our geographies, or focused on a use case where we can't be a customer in the near term, then we work more closely with the founders on more strategic topics, making warm intros to our network, helping them think through any problems that we have above and beyond sort of what we could do as a customer. At the end of the day, the realization is there's a lot of capital out there, not that many good companies, and we're very thoughtful that whatever company we invest in, we're able to add value above and beyond what our check can write.
That's great. Thanks. And Ben?
Yeah, I would say very similar answer to that, and it's unique in each investment situation. But it all comes down to a strategic alignment and really kind of an opportunity to collaborate or work together. So whether it's us buying from or us selling to the startup, or us co-developing, working on a JDA together, there's really kind of needs to be that strategic reason to invest. And one of the justifications for investment, and one of my favorites, is when Saint-Gobain or when Nova invests in a company, it really unlocks the full potential of our support globally. And so by being an investor, we are incentivized for that startup to succeed, and to help that startup succeed. And so it unlocks kind of the full range of support from any of our businesses. So that's a strong justification. And there's a number of others. It could be, the success of this company will help grow a business of ours, or really a wide range. But it all comes down to that. Yes, it needs to make financial sense, but there needs to be that kind of strategic benefit to both parties.
Great. And Mateo?
I would say there's kind of no kind of straight answer here. I mean, on one side, we have obviously the best kind of the best strategic value is a good financial return, right? That's for sure. But we try actually to separate what are investments to collaborations with CEMEX, kind of as CEMEX as a customer, right? Because I mean, there's a lot of technologies or things that are happening out there where our role is to anticipate what CEMEX will need or will be in the future, right? So if we're just investing because CEMEX wants to become a customer, kind of that's too short-minded, right? That's kind of just looking at the short term. We're actually in venture capital, we're talking about long-term results, right? So we're trying to focus on that. That's a kind of our core, that's our mission, right? Anticipating what will be needed in the future. But so we try to separate it, and if we invest, that's kind of through the investment committee decision, but it's not kind of validated by the business unit, right? So, and actually it happened, right? Where there could be a connection, between the companies, CEMEX and the startup, it eventually develops. And if not, then you cannot push that, right? If we try to make very clear we're not a kind of like an IT arm of CEMEX where we push solutions to the business units. It has to be the business units that require some solution, right? Because if not, you're going into a very dangerous position where if you recommend something, it is used, then kind of, I mean, there's a saying in Spain that victory has a lot of fathers, but a failure has just one name, right? So if everything goes well, you don't have the merit. If it goes wrong, then it's your fault, right? So that's a very dangerous position. But obviously, we act obviously as an ambassador. We recommend the solution, but we don't push them. Right? That's something a little bit dangerous.
No, that's great. And I kind of want to just open up this next point for discussion because you brought up two things right there. And this is kind of where I go off script, and I just want to brainstorm with you all a little bit on this. You mentioned two things. One, venture capital investing is long-term. To me, this was always a conflict I found when I worked with corporate venturing units, is a lot of times in direct confrontation with the overall corporate goals, which is looking at short-term value and short-term value creation, especially if you're a public company. In the case of being a general contractor, you were putting out fires, and a lot of the people on your site are looking at the problem that's like right in front of their nose and can't think 5 years down the road. And so how do you measure value, and how do you continue to get buy-in from the stakeholders that are making sure you all have jobs and are continuing to provide value to your organizations as you go forward? And feel free to just kind of chime in, guys, if anybody has any insights on that.
Yeah. I think that's a great question. And it's, I mean, for all of us in a CVC role, part of our role is selling internally and kind of bringing this external innovation into the company. But one major component that I look at and I would say use when talking about partnering and investing in startups is you have these large corporations with some of the leading R&D capabilities in the world. It can be very cost efficient to explore something completely new by investing in a startup and kind of letting them dive into it. And so for some of these kind of next horizon or further horizon innovations, your options are you could start a complete new R&D group and invest a lot initially in them, or you can kind of feel the water and test it out by partnering with an external group. And so that, I think that's a large justification for getting in very early stage with these companies where the benefit may not come back for 5, 10 plus years.
Yeah, so you just started touching on something there, which is going to take us a little bit in a different tangent, but still related to that topic, which is selling internally. How do you get adoption from the different business units and the end stakeholders within your organizations that will actually be piloting and deploying these different technologies? And then kind of the other question of that is, how do you deal with egos within an organization? So many times you present a startup and somebody on the team can go, I can build that better, I can make it better. So how do you balance those two things, and how do you really sell adoption throughout your organizations to make sure that people are bought in on using these startups from the beginning?
Yeah, I'll have to chime in here first. I think there's a twofold challenge that we face as CVCs. You need to get the broad organization excited about the work you're doing, and you need sort of senior leadership and corporate to also give you sort of the support that you need. On the first one, and this is touching on Mateo's point from earlier around investing versus piloting and scaling, we actually have separate processes. So we have a dedicated team of 7 staff nationally, whose job is to pilot different solutions, double down on what works, and make sure that it scales. In our ideal scenario, we would pilot, we would see that things are scaling, and then we'd make an investment. Now, it doesn't work sort of that neatly always, so we end up running the 2 processes in parallel. Now, if we do have something that is scaling that we invest in, we just keep a closer eye on and make sure that both our teams are using it to its full potential, and that the startup founders and that team is getting the feedback that they expect from us. On the corporate side, we are unique in that we're a single shareholder owner CEO. So our CEO, John Fish, is fairly innovative and tech forward. So we have a lot of support from top down. Our CFO as well, Puneet Mahajan, spent 20 years at General Electric before joining us, and he's very forward thinking when it comes to investment. So we've been very lucky in that we have that top down support, and we have a dedicated team to drive engagement and excitement. And above and beyond pilots, one thing that's working for us really well is to involve different people within the organization in the diligence and sourcing process. So there's an open communication channel to say, hey, so-and-so, I came across the solution. Have you sort of heard anything about it? What do you think? It's extremely valuable feedback, and it makes the organization have more and more ownership in the corporate VC, and doesn't become this sort of external thing managed separately by a group of people that we don't really know. That can sort of result in some of the tensions you were referring to earlier.
That's great. And Mateo, any reactions to any of the tangents we just went down?
Yeah, no, a few comments. I mean, we started kind of very independent to CEMEX, so with our kind of own decision making, which kind of was completely separated to CEMEX. Obviously, kind of as a corporate VC, kind of trying to tie you a little bit closer to the core business. So I think it's kind of like, obviously, because there's that internal sales there, you have to find the right balance between kind of Horizon 3 investments and more closer to the core, right? Which because I mean, you need to, and that's kind of a battle we have every time, right? We have to explain why we need to invest in this company, and sometimes this could be kind of a business for the future, right? Or this could be because obviously there has to be always a CEMEX fit, what we call. So there has to be some connection to the business somehow, right? For example, we don't have, as a building material company, we don't have anything to do with designers, with architects and so on, right? But there's kind of that idea of CEMEX of how can we get closer to designers? How can we get, because we're so far away of people that are kind of influencing a decision, right? So why can't we invest in tools that help those developers, those designers, and somehow we can connect, right? So I mean, there's kind of some crazy ideas. Some of them are kind of closer to the core. I mean, supply chain, for example, is something that lies very close to our core. Which, for example, we invested in a company called Go4. They do last mile delivery of materials, and initially we didn't have any kind of buy-in from the business unit, and I started receiving calls from the business unit like, hey, I want to meet those guys, right? So that's kind of the kind of the best way to sell this internally, right? But yeah, obviously we do also some initiatives that are closer to the core of what have you guys seen in that, right? So I think it developed that we started very far away, and people started kind of seeing, okay, as a reference in terms of technology, innovation, and so on, and what is happening out there. And people started kind of asking for our help, right? So that developed naturally. And in terms of the kind of the egos, it's a good question, but I know I can develop that by myself. I get that every time, right? So, but I think it less and less, and I always use the same example. There's a quote from the CEO of MySpace at that time when they tried to do that, right? Everything by themselves, and there was Facebook that started kind of initially, and everyone knows the story, right? But they opened up to developers, and that's when it really kicked off, right? So at the end, MySpace admitted, I mean, if we would have focused on just 5 things that we wanted to develop ourselves, and the rest leave it to our other developers, that's kind of the strategy that Facebook at the end had, right? So that's the example I try to use every time I get that kind of, no, I can develop that myself. And I said, is that really kind of your core, developing that?
Yeah, and I think there's a balance there, right, between internal innovation and external innovation, and really the C-suite and the executive team creating a strong strategy that says each of these groups are working on these different things. There's a place for both within this, and I know you guys probably understand this better than most, but you have more challenges than you are capable of solving with your teams. So there's opportunities for internal innovation still, there's opportunities for external innovation still, and making sure the dollars are going to the right places and each team is properly resourced to execute on that is how you really create that holistic and comprehensive strategy. A piece that I want to get into now, I'm sure you guys are pitched daily by startups. I'm curious kind of what sort of technologies you're seeing pop up that are really getting your attention and have you excited about the future. And feel free to use an actual company as an example, or just any sort of trends that you're observing that you and your team are really keeping a close eye on. Ben, you want to kick us off?
Sure. And I'll add one point to your last point, that I think buy-in from the top level and kind of executive buy-in is really, really key to success of these programs. But some areas that we're excited about, I guess I'll start with one, kind of all things around sustainability. And I think, I mean, we're seeing a lot of large corporations with their carbon pledges and different new goals and metrics that everyone has to hit. And so I think that's kind of an overarching theme across our businesses, but also across our investments. And that I'll bring up an investment that we announced publicly today in Ecomedes, which is a platform that enables selecting your building materials based on your specific requirements, sustainability requirements and specifications. So really things along those lines. I would say I'll just touch on two other areas, kind of all things digital, and then prefab as well. And that's always kind of these new automated methods and digital methods of building are all areas that we're very interested in.
No, that's awesome. And I'm glad you brought up prefab. That is my personal passion project at Shadow Ventures. And Mateo, I know it's going to be midnight, but I'm doing a presentation later this afternoon on industrialized construction. And one of the pieces I touch on is how building product manufacturers can get more involved within that ecosystem. So that is something that I'm constantly looking at and trying to find solutions for within that space. But okay, I'm digressing. I'm going off topic. Raja, any technologies or companies that really have you excited that you guys are looking at right now?
Yeah, we have several themes within construction that we're very excited about. Design is one, especially generative design. It's inevitable. It's just a matter of when. Anything around marketplaces gets us excited. The industry is extremely fragmented in any direction that you look at, and marketplaces are able to drive more efficiency in very interesting ways. So we're always on the lookout for good marketplace ideas. Anything around environmental efficiency and sort of greener tech also gets us excited. There's an ethical sort of driver there. There's a regulatory driver as well playing catch up. And I also think that, or at least aspire to build greener, more efficient energy-wise buildings in the future. Fintech is another area we're thinking more closely around. Construction is all about transactions from the bank to the developer to the GC to the sub to the other sub to the worker. And in as much as you can make those payment flows more efficient, you can probably extract a lot of value there. And then taking a bit of a step back, everything that has to do with data and analyses, particularly unstructured data, gets us excited. If you think about how we make decisions in construction, you look at a wall and you say it's completed or complete, it's right or wrong. That triggers your payment flows, that triggers your legal obligations, whether you're meeting your schedule milestones, and anything and everything that helps you augment that expertise of the 60 or 70-year-old superintendent and make it easier for the 20 and 30-year-old superintendent to do their job better. It will probably help move the industry forward in a meaningful way.
Awesome. And Mateo, any reactions to any of that?
Yeah, so we have our priorities, and kind of very similar to Rajas and Brian, and Ben knows them well because we're working together in the startup competition, right? So, but right now there's a long list of things on the pain points that we have identified in construction, but it's too long, right? So you have to start somewhere. So obviously sustainability is something that we're looking at, and I think it's very, very aligned to Nova because we come from the same place, right, as a supplier. But sustainability in construction, we're looking a lot at carbon capture, at alternative binders from waste. Actually, we did an investment this year, kind of to use plastic as an additive as an aggregate for cement and concrete, and also kind of carbon use or conversion to products, right? How to embed those products into concrete. We have a lot also in terms of circular economy. How can we build so that we can also demolish better and more efficiently? Obviously, supply chain has been one that has been there for a long time. if you look at how much materials are as a cost for a construction project, and there's a lot of things to improve there, in terms of transparency, costs, delays, coordination between. There's a lot of people involved, right? And if you're talking about materials, so from the general contractors to the subs, to the suppliers, to distributors, to manufacturers, right? So there's a lot of people involved in the process. So we want to make that more efficient. Obviously, new construction methods, you mentioned prefab or offsite and modular construction, but also 3D printing. It's something that we believe not in the short term, but in the long term, be something interesting. But yeah, offsite and modular, I know, Brian, you and I had a discussion about it. But again, also payments is something that again, it all kind of boils down to P&L, right? So and an ERP is a kind of the key system in a construction firm. So you want to kind of help that flow of information and payments.
No, that's great. Thank you. And so we have a couple minutes left here, and we have a couple questions from the audience. So I want to make sure that we get a chance to jump into these real quick. I like the first one because it's going to challenge you guys. And it's kind of some of the stereotypes that you probably hear quite a bit around corporate venturing. So how do you address VCs think that strategics have the wrong model and incentives to support startups? Specifically, they call out 3 different things. So 1 is trying to control the product roadmap. 2 is driving away potential acquirers. And 3 is strategics don't do follow-on rounds. So feel free to react to any of those. I'm sure you guys field those types of questions all the time. So definitely, excited to hear your responses to those.
Yeah, I'm happy to take this one. I already typed up an answer. So
Nice.
had some time to think about it. I think on number 1, trying to control product roadmap, part of the value CVCs add is giving the product feedback. And it's on the corporate and the founders to be thoughtful about setting expectations and taking decisions there. So whenever we have a case where we're using the product of the portfolio company that we invested in, we tell both the founders and our users that, look, we're going to be giving a lot of feedback, positive and negative, but we sort of impress on our team that we are not their only customer. They have other customers, and it's on the founders to make decisions around their product roadmap. We should respect that process. And that tends to resonate a lot. We also tell our founders that, look, our teams are very excited about you. They want to push the product in this direction. If that's not right for you, feel free to push back. So we empower our founders that way as well. And that's sort of worked out. Again, it's all about setting the right expectations early on. And we've gotten better and better at it over the last 2 years. In terms of driving away acquirers, I haven't seen that in the industry, not recently at least, so I can't comment either way. On number 3, strategics.
Yeah, I always get excited about strategics because I view them as acquirers, right? If you're investing early through the VC model, there's a potential opportunity where you're buying down your future acquisition costs because you already have equity control in that company.
Exactly.
Maybe less on your front sometimes, but I'm hoping Ben and Mateo look at it that way in some instances, especially if it's a building product that they're investing in. So sorry to cut you off there, but number 3, go ahead.
I agree. And it's also a good way to build relationships with the founders earlier and earlier and sort of see their journey. So you can build even more conviction if you were to acquire. On 3, the strategics don't do follow-on rounds. We had the exact opposite problem recently. A company we invested in Series A, Open Space, raised a very competitive Series B. And we really wanted to double down and go sort of even above pro rata, but there's just no space at all. That said, I do see sort of, this is a common caution that we received when we started on our journey. And I do think that CVCs are increasingly behaving like institutionals, where on a deal-by-deal basis, they set up reserves and then they reassess it when it comes up for another raise to see if it makes sense to double down or sit that round out.
That's perfect. And Ben, Mateo, any final thoughts? We got a minute left here. Just want to thank you all for taking the time out of your busy days to participate in this panel discussion. And so if you guys have any final thoughts, Ben, Mateo, please, feel free to jump in and share them now.
Yeah, thanks a lot. I think this has been a great conversation. I'll just, I guess, put a plug for the CEMEX competition that we're running with them. I'm excited for that. And also, Raja, excited to see your accelerator and program and how that works out.
Thank you. Applications are open until October 16th. Suffolk-tech.com/boost to learn more.
Nice plug. And Mateo?
There's nothing else to say here. Yeah, no, it's great kind of always to have these kind of discussions and learn from each other. I think kind of like Raja was saying, I think that the CVC model has developed a lot. I mean, obviously advice for startups, you have to learn who you have in front of you because there are obviously some CVCs that don't have kind of the same kind of perspective as we guys have, right? So kind of obviously you have to be careful, and you have to know if they have a dedicated team. You have to look at what kind of things they ask for, right? If they have kind of especially they demand special rights and so on. So it will become very obvious if they want to control the roadmap or just advise you, or kind of follow-on rounds. You can ask other startups from their portfolio what they've done. Actually, we've done round follow-on in most of the companies that we invested in, right? So yeah.
Boom, mic drop. All right, well, thank you guys. Definitely appreciate the time once again. For the attendees, if you want to connect with any of our panelists, jump over to the Slack channel. They'll be in and out of there. We have about a half an hour long break on this channel before we kick off our next session. So if you don't just want to watch the looping video that says we'll be back soon, jump over to another channel for more sessions. If not, go grab lunch. Thank you guys. I appreciate your time again, and enjoy the rest of your days.
Thanks, Brian.
Thanks a lot.
See you guys. Bye.
Bye-bye.